I'm here in London at the Landmark Hotel for the European Public Real Estate Association's annual conference. Joining me is Steve Buller, Portfolio Manager with Fidelity Investments. Steve, let's start by talking about the European real estate market. What's your outlook overall?
Unfortunately, I must say it's fairly average. If you're looking at the fundamentals, whether it's office, retail, logistics, or hotel, it's pretty wishy-washy out there. Nothing really strong, nothing really weak. So on the fundamental side, we don't see that as a primary driver. On the capital side, though, we do see that the listed players have somewhat of a competitive advantage. Unfortunately, they're not able to take advantage of that through acquisitions, as many of these acquisitions are being fiercely sought after by other players.
And whether it's within Europe or perhaps outside of Europe, where do you see the greatest opportunities in real estate investment right now?
Within Europe, actually we're seeing more in some of the alternative sectors, whether it's student accommodation in the United Kingdom or self-storage both on the continent and within the UK, kind of away from more traditional sectors of retail and office.
And are there any areas that you're hearing other investors looking at that, you know, they're expecting strong returns where perhaps you have some doubts?
That might be in London office. That has been a well-played or well-discussed story over the last few years. I think given some of the new supply that's coming online and also some of the cutbacks within financial services, you'll start to see a slowdown there.
And obviously there have been a number of shocks to the worldwide economy lately. What do you see as the biggest threat to the global real estate investment market?
I think that's once again that the access and the cost of capital being put into question. First, if you don't have access, like we saw or almost saw within the global financial crisis, that is very much dangers the property industry. As we all know, property is a very capital-intensive industry. And second is that cost of capital. Although we've yet to see a huge change yet, if that were to have any increase in that cost, I think you would see property securities go down significantly.
And continuing on that topic of capital, how is the listed real estate sector, let's focus on Europe, faring in terms of attracting capital?
Very similar to other areas around the world. That is their distinct advantage right now, is that their cost and that access to capital is not yet in question at all. And we assume what we've learned in the global financial crisis, that lenders, whether it's the unsecured bond market, whether it's banks, whether it's insurance companies on a secured type basis, will continue to lend to the listed sector over all other forms of ownership.
Great. Steve, thank you very much for joining us.
You're welcome.
Great. For more on this and other interviews from the annual convention, please be sure to visit REIT.com as well as EPR.com.